All right, why are Treasury rates going up? This just doesn't seem like it makes sense. Well, let me try to make sense of this. The Fed just lowered rates by 50 basis points, right? That's 0.5% at its last meeting. And for the most part, I think the market is pretty convinced that the Fed will lower rates by another 1/4 point or 25 basis points in the November meeting. I just read that about 87% of the market is pricing that in. So that's in total like 0.75% decrease in rates. So then what gives with the 7-year Treasury? I like to follow the 7-year Treasury because that's what we use. We don't like 5-year debt. We don't like 10. We like to be right in the middle. Since the 1st of October, it's gone from like 361 to now almost 410. So that's a 50 basis point increase. So the Fed is lowering rates, but the Treasury rates are going up. Well, what gives? What's the deal? So as best I can tell, I'm not an economist, but it looks like it's because the market believes that the economy seems to be pretty strong. The jobs report came out very strong. Retail sales was better than expected. Existing home sales was better than expected. And inflation was slightly higher in the last report than the expectation was. So I think the market is thinking that the Fed is two things. One, not going to lower rates as fast as we had previously thought, right? That seems to be happening to us a lot. But there is also, more importantly, potentially the market is thinking that the Fed is trying to go to a neutral interest rate. And a neutral interest rate is, most people have believed, is somewhere in the threes. Well, it may very well be that we are sitting here where we're at and we still have a very strong economy. So there's a school of thought that the Fed might believe that neutral interest rates are actually quite higher than we previously thought. That could be part of the reason the longer-term treasuries continue to go up rather than down and following the Fed's decrease. I know that's confusing. There's a lot of factors that go in here into this whole equation. Now, there is one more complicating factor, and that is you got to think about, the Fed controls the Fed funds rate, but they don't directly control the treasury rates, right? They just don't. So those rates are set by the market. So what happens is the government has to constantly refinance its debt. So it brings out new securities, and then people bid, institutions and whatever, they bid on buying those securities so that the U.S. government can refinance its debt. And, this is a market system. So it's very possible that there's a little bit weaker demand for those longer-term treasuries. Because of that, when demand goes down, the price goes down. And in the treasury world, or in the bond market, if price goes down, that means the yield goes up. So that could be an aggravating factor here as to why rates continue to climb, despite the fact that everybody thinks they should be going down. So I know a lot of competing factors here. What I think is the most prevalent factor is the fact that people believe in general the economy continues to be pretty strong despite interest rates being elevated like they are now. Hope this helps clear that up. If you like the content that we've shared here, please be sure to subscribe to our channel and hit the bell. So thank you again and have a wonderful day.